Hey there, everyone. It's Mike Petras with MPRE Boise. And today we're going to talk about something really heavy. Something I've read comments about and something that's been on most people's minds that they care to admit. And that question is, what would happen to the housing markets in the U.S. if World War III broke out? Now, some of the comments I've been seeing are hoping that prices will collapse and that mortgage rates would skyrocket, or do we even have a real estate market anymore, period. But most importantly, what does this mean for you as a buyer, seller, or an investor? Well, this isn't clickbait. It's a scenario worth understanding because while we hope it never happens, planning for the worst is what smart people do. And so today we're going deep. No sugarcoating, no headlines, just straight analysis on what war would do to prices, rates, lending, construction, demand, and the very concept of ownership. So let's go ahead. Let's break it down. First, let's start with housing prices. The illusion of stability absolutely gets shattered. When global war breaks out, predictability is the first casualty. And in housing, predictability is everything. Prices rely on confidence in the future, on available money, and on people being willing and able to move. Well, World War III would decimate all three. In the early days of the conflict, real estate markets would go eerily quiet. Not because home values have lost their intrinsic value, but because nobody would want to move. Buyers would freeze out of fear, lenders would get cautious, and sellers might flood the market with panic listings, especially those trying to get out of large urban centers. That sudden drop in demand, paired with a short-term spike in supply, could send prices downward. However, this wouldn't happen evenly. Some areas would get hit far harder than others. Major cities near military installations, coastal zones with shipping vulnerabilities, or symbolic economic centers like New York City or DC would likely see sharp declines. People would no longer feel safe in these locations. On the flip side, markets like Boise or markets that are quiet, inland, and away from strategic targets could see increased demand, not because people are chasing investment gains, but because they're seeking safety, community, and survivability. Yes, it's that deep. So while the national housing market could fall into recession, smaller, low-profile markets could experience price spikes as they become geographic lifeboats. What about mortgage rates? Well, global wars create panic in financial markets. And when fear spikes, investors rush into what they trust most, the U.S. Treasury bonds. That flood of investment drives Treasury yields down, and since mortgage rates track closely with the 10-year Treasury, mortgage rates could actually fall in the initial phase of a global conflict. Now, this confuses people. You would think that war equals risk, and risk means higher rates. But in practice, it often means the exact opposite, at least temporarily. Lower mortgage rates could be a side effect of global instability, which there would naturally be. But even if rates fall, don't expect builders to celebrate. The builder segment would be in deep trouble. New construction relies on three things: stable supply chains, a steady labor force, and a reliable buyer's demand. And all three vanish in wartime. Material costs would skyrocket, like lumber, concrete, steel, and copper wiring are all a part of international supply chains that would become fractured or blocked entirely. Cement production depends on energy. Steel depends on shipping. And disruption in oil, gas, or trade routes would immediately raise costs across the board. Meanwhile, the labor pool shrinks. If military drafts return or if workers voluntarily enlist or relocate, builders will be left scrambling to finish existing projects. Trades like electricians, plumbers, and framers are already in short supply, and add a war to that, and you're looking at a half-built subdivision sitting idle for months. And then you got the permitting and financing mess. Municipal governments would likely tighten budgets, pause infrastructure projects, or delay inspections. And lenders? Good luck on getting a spec loan during wartime. Even national builders with deep reserves would have trouble justifying forward builds in an uncertain demand environment. So even if mortgage rates drop, new construction grinds to a halt. builders slash prices, and offer every incentive imaginable just to liquidate their inventory. You'd see crazy packages like free basements, kitchen upgrades, 3-2-1 rate buy downs, and even car giveaways. Yet demand for new homes still might shrink, and not because people don't want them, but because no one wants the risk of a half-finished home during global instability. In Boise, that would mean near standstill in new construction, pushing more buyers back into the resale market, and driving up prices on existing homes in the right areas. So let's talk about who still buys real estate in wartime, and it's not who you would expect. In the beginning, the average buyer, young families, first-timers, move-up buyers, would freeze. The uncertainty would even paralyze them. Even if mortgage rates are low, no one wants to take on new debt when headlines are screaming about bombings or invasions. But once the dust settles a bit, certain buyer profiles would emerge. The first, believe it or not, are foreign nationals, especially from collapsing economies. These aren't tourists, they're capital refugees. When currency devalues and regimes grow unstable, these buyers move cash flow to where they trust the rule of law, and that is still the United States. They're not looking for bargain flips. They're buying $500,000 to $5 million homes in cash, simply to get their money out of harm's way. And then you have the rural reboot Americans, people who just want to get out of big cities for good. These are military families on relocation orders, remote tech workers fleeing density, and blue-collar Americans looking for autonomy. They're going to think water rights, no HOA, garden space, maybe even room for livestock. These buyers aren't romanticizing rural life, they're preparing for it. And Boise has long attracted this crowd. Last are the wealthy urbanites and tech refugees. These are folks with 7 figures in the bank and no desire to wait around for the next crisis. They're not upgrading to a bigger home in LA. They're buying land in Idaho or other places with land, with space for a hangar, backup power, and solar. Their mentality shifts from luxury to security. So expect bidding wars on ranches, horse properties, and anything with acreage and a well. Sellers, some will panic, some will win. In a wartime economy, not all sellers are created equal. The motivations behind listing a home would shift dramatically, and so do the outcomes. Sellers in urban centers, especially like high-profile coastal cities, are likely to act quickly and emotionally. These are the homeowners who start seeing their neighborhoods change overnight. Maybe there's increased police presence, more talks of potential attacks, or simply the weight of uncertainty. That's when these listings start hitting the market in bulk, and not because owners want to move up, but because they want out. For example, a homeowner in Washington, D.C., living within 10 miles of a federal building or military target might list their home at a steep discount just to liquidate or relocate. They prioritize speed over price. The problem is, so will everyone else around them. This glut creates localized price drops and long days on market, even in traditionally strong areas. But on the flip side, sellers in markets like Boise, Missoula, or other perceived safe zones become reluctantly heroes of inventory. These sellers are not in a rush. These sellers realize that they've got something the market suddenly wants: distance from danger. And if they decide to sell, it's usually with leverage. And they use that leverage to hold firm on price or negotiate favorable terms, maybe even cash-only deals. So imagine a homeowner here in Eagle, Idaho, listing their property with a finished basement and a backup generator. That home might get multiple offers from buyers fleeing from Seattle or the Bay Area with cash in hand. But it's not all smooth sailing. Even sellers in these hot wartime markets face logistical challenges. If the lending system gums up, as it likely would during large-scale conflict, buyers may struggle to get mortgages approved. And that means sellers either have to wait it out, lower their standards, or accept creative financing like owner carries, lease to own, or outright cash. And then there's just the fear factor itself. Some sellers don't want to move. They'll just want to be stuck. And that leads to pocket listings, off-market deals, or sellers testing the waters without committing. The seller landscape during World War III would be a game of psychology as much as pricing. And now, what about investors? If you want to see who's truly prepared for wartime housing volatility, look no further than the real estate investors. But this group splits hard between those who want to survive and those who will vanish. On the losing end will be flippers. Their entire model depends on buying low, renovating quickly, and selling in a hot or stable market. But in a war scenario, transactions slow dramatically, material costs soar, and labor evaporates. That means that projects stall mid-construction. If you're sitting on 3 rehabs in Phoenix when the war breaks out, you're suddenly paying holding costs on properties you can't finish and no one wants to buy. Financing terms tighten, hard money lenders panic, and exit strategies collapse. Then you've got the short-term rental crowd. Airbnb hosts in tourist-dependent cities are hit hard. Occupancy dries up immediately. So think about someone operating a luxury Airbnb portfolio in Scottsdale or downtown Austin. They might go from 90% booked to 0 overnight. These properties turn from assets to liabilities very quickly, especially if they're leveraged. But of course, not all investors will suffer. In fact, some might thrive. Buy and hold landlords in stable, rural, or secondary markets may become wartime housing providers almost overnight. So picture a landlord in Nampa or Caldwell with 10 single-family rentals. Suddenly, military families, out-of-state relocators, or even government-funded evacuees need a place to live. With mortgage lending in chaos, more people rent. And with uncertainty in the job market, people will stay longer. Government support may also shift. The federal government, in an effort to stabilize housing, might roll out Section 8 style subsidies, military housing vouchers, or emergency relocation funds. Landlords who are positioned right, debt light, or cash flow focused and well insured could enjoy guaranteed rents and 0 vacancy for years. Additionally, farmland, land parcels with water rights, and multi-acre rural properties become hot commodities. Investors who hold these assets don't just survive, they become local kingpins. And in a time when food security, energy, and self-reliance take center stage, those with land and infrastructure will be far more valuable than those with downtown condos or vacation rentals. The key is flexibility. The investor who can pivot from short-term to mid-term rentals, who can offer creative lease structures, or who can provide housing to displaced families becomes not just profitable, but essential. World War III doesn't just test your portfolio, it rewrites the rules for what real estate investing even means. And so now I hate to say it, but what happens if U.S. cities are bombed? Let's go all the way dark. If a major U.S. city is hit, say nuclear detonation in New York or D.C., the market just doesn't slow down. It completely breaks. Directly hit cities become financial dead zones. People evacuate permanently. Insurance becomes invalid or impossible to obtain. No one wants to live there, no one can buy, and no one is lending anyway. Meanwhile, inland cities 300 to 1,000 miles away, cities like Boise, Missoula, Billings, Rapid City, experience unprecedented in-migration. They don't just grow, they become overrun. Every hotel, rental, campground, and short-term rental is occupied. Rent prices spike. Property values skyrocket. FEMA would be activated. Large landlords could be forced or incentivized to house displaced populations. Entire apartment buildings could be temporarily nationalized. If you own vacant units, you may be legally required to open them. The financial system likely collapses temporarily. Title companies stop closing deals. Banks can't process mortgages. Cash becomes king. Crypto might get used, but only peer-to-peer. If you're a buyer, seller, or investor, you better be liquid and local. And don't expect BlackRock or Vanguard to scoop up foreclosures. Institutional buyers vanish. REITs collapse under debt and margin calls. Real estate reverts to individual owners and local players, people with tangibility, equity, and tactical flexibility. So the bottom line is World War III doesn't just break housing, it splits it. It isn't about good markets versus bad markets. It's about real estate being weaponized by geography, risk, and psychology. Mortgage rates might drop, but they'll be irrelevant if the banks collapse. Prices may fall nationally, but hyper-local markets could see 30 to 50% gains in a year. Sellers in the wrong areas will be lucky to get out. Sellers in the right zones will hold all the cards. And buyers will look less like families and more like global escapees or strategic rural migrants. And investors become the next land barons or a cautionary tale. If this helped you see real estate through a different lens, a scary one, please subscribe to the channel, hit that like button, and share this with someone who still thinks real estate is still about kitchens and countertops. And if you're planning ahead or you're planning your exit, download the relocation guide below. You'll be glad you did. But if the worst were come to pass, stay sharp, stay ready. God bless you all. War is a terrible thing. And I look forward to bringing you a more exciting video next time. Thanks for watching.